Hey everyone, and welcome. Today we're going to talk about something that most of us have, but almost never actually look at our insurance policies. And we're going to see why giving your coverage a quick checkup could be one of the smartest financial moves you make all year. So let me ask you a question, and be honest. Where is your insurance policy right now? Is it tucked away in some file cabinet? Buried under a pile of papers in a drawer somewhere? If it's out of sight, it is definitely out of mind. And you know what? If that sounds familiar, you are not alone. Not by a long shot. It's such a common thing to do, right? You do all that hard work up front, you research it, you buy the policy, you feel secure, and then you file it away. The mindset is set it and forget it. You just trust that it's going to work exactly as promised year after year after year. But here's the thing, and this is really the crucial point. Insurance isn't something that's frozen in time. Your life changes, right? Your needs evolve. And the market itself is always shifting. There are new products, different prices. That policy you bought 10 years ago, it might be a totally terrible fit for your life today. And this brings us to the real danger of that whole set it and forget it approach. Your policy can actually have hidden triggers or deadlines built right into it. And if you miss them, well, you could be in for a pretty serious financial shock. You can think of these as decision deadlines, these critical moments baked right into your policy. For term life, it's the end of that term. For an annuity, it's that magic moment when the surrender charges, those fees for early withdrawal, finally go away. And for a universal life policy, it might be the day you realize it just isn't growing the way you were told it would. Each one of these deadlines forces you to make a choice, and, well, ignoring it can have some pretty negative consequences. Let's take term life insurance as a perfect example. For years, maybe 10, 20 years, your premiums are super stable, totally affordable. But the day that term ends, bam, you can get hit with this massive price hike just to keep the exact same coverage. It's what we call premium shock, and it's a really unwelcome surprise that most people are just not ready for. Now, universal life policyholders, you face a different kind of risk. Think of these policies like a big ship on a long journey. Their performance depends on the weather, things like interest rates and all the internal costs. So if there's no one at the wheel paying attention, that ship can get blown way off course. And it might end up needing a lot more fuel in the form of higher premiums, or it could even sink entirely if you don't keep an eye on it. So, okay, with all these potential pitfalls, what's the solution? What do? It's actually really simple. It's a policy review. It's a totally straightforward way to cut through all the confusion and just feel confident again about your financial plan. So, what is a policy review? Well, it's pretty much exactly what it sounds like, a professional look at the coverage you already have. The goal is super simple. First, to understand what you actually own. Second, to check if it's doing what it was supposed to do. And third, to see if the market today maybe has a better way to get you to your goals. And let's be crystal clear about what this is and what it isn't, because I know what you might be thinking. A proper review is an educational tool. It is not a high-pressure sales pitch. It's all about giving you the information you need. It's a confidence check, not some kind of commitment or obligation. It's a practical evaluation, not a push to replace anything, unless the numbers clearly, absolutely justify it for you. A really good review boils everything down to 3 fundamental questions. Number 1, what do you actually have? We're talking benefits, premiums, hidden fees, the whole shebang. Number 2, what is it doing right now? Not what it was promised to do, but what's its current performance? And number 3, based on today's market, is there a better option out there for you? Simple, direct, and honestly, so powerful. Okay, enough with the theory. Let's make this way more concrete and look at how a review actually works for the most common types of policies people have. All right, first up, let's talk about annuities. This is a huge area where reviews often uncover some really great hidden opportunities, especially as a policy gets a little older. So for anyone who has an annuity, especially one that's getting close to the end of its surrender period, this is the big question, isn't it? Should I keep this or should I upgrade? Pretty soon, you'll be able to get to your money without any penalty. A review helps you analyze whether just staying put is your best move, or if maybe a newer product could offer you better rates or better income features. Next up, term life insurance. Remember that timeline we looked at? For these policyholders, a review isn't just a good idea. It can be an urgent, absolutely critical necessity. The whole point here is to get ahead of the problem. If you review your policy a few years before it expires, you give yourself options. Lots of them. You can compare rates for a new term, you could maybe explore converting to a permanent policy, or maybe you decide you don't even need the coverage anymore. You get to do all of that before you're backed into a corner by that crazy premium increase. And finally, let's talk about universal and index universal life policies. These are the ones where that gap between what you expected and what's actually happening can often be the widest.
This is such a common thing to hear, and man, is it frustrating. You were shown an illustration that projected all this great growth, but years down the line, the policy is just lagging. A review is really the first step to figuring out what's going on and what you can do about it.
A real deep dive review is like opening up the hood of the car. It checks to see if the premiums you're paying are still enough to keep the engine running. It looks at whether rising internal costs are eating away at your cash value. It checks for any loan activity that might be hurting the policy's stability, or if the interest being credited is just way lower than what was originally projected. This analysis is absolutely key to getting that policy back on track. So look, the big takeaway here is that you don't have to stay in the dark. You don't have to guess. There is a clear, simple path to getting the answers you need and just feeling confident about your coverage again. And getting started, it's honestly not intimidating at all. It's just 3 really simple steps. Step 1, just find your most recent policy statement. Step 2, think for a minute about your main goal or the one big question you have. And step 3, reach out to a professional and ask for a review. That's it. Simple. So I'll leave you with this thought, which I think just perfectly sums up everything we've talked about today. Insurance is not a one-time decision. It's a strategy, and strategy should be reviewed. Don't let your strategy gather dust. Thanks for joining me.